bilo bi poprilično korisno pokrit basics.
Ok, cool. Da, mislim da to isto dosta ljudi... Tipa jučer sam pričao s nekim financial advisorom, on kuži tipa strategije neke, kuži kak tradat stvari, ali ne kuži kak iskoristiti opcije za, napraviš ovo da bi dobio ovaj outcome. Ili da neki ljudi stvarno kuže matematički, inženjeri opcije, ali ne kuže koliko jednostavni koncepti mogu imati, kakav efekt imaju na ljudski portfolio. Tako možda možemo proći kroz basics. Borna je već pro u ovome. Znači, mi se znamo sfera.
To je malo prejako, ali hvala.
No, znači, nešto smo se čuli samo preko poruka i za 2 mjeseca mi javio, ja sam 8% prvi mjesec, 8% drugi mjesec, rekao ok, svaka čast. Pa bi bilo dobro podijeliti sa tvoju filozofiju, di si sad trenutno i koji su ti problemi sad nakon par mjeseci tradanja?
Može.
Još odmah?
Pa odmah. Pa ovak, znači, trebalo mi je na početku sigurno nekih 2-3 tjedna da uopće skužim šta su opcije. Znači, pogledao sam sve videe po 10 puta i onda sam preko QuantWheela gledao šta koja opcija, mislim, koji su parametri uopće, kako možeš filtrirati to. I onda sam počeo samo i znači prvo sam zbilja iskoristio ono što mi je došlo u prvih 10 i onda sam gledao ok, jel firma ima kakvog potencijala i ono gdje bi ja bio sretan da imam dionice te firme. U principu jako dobro išlo. Znači kako smo pričali prva 2 mjeseca, ali to sam sa jako malo kapitala išao. To je isto bitno za reći, znači možda 2000 eura sam imao. I znači onda jedino kad su počeli problemi je bilo kad sam počeo više kapitala stavljati i kad nisam znao uopće kako sad shendlat više kapitala, zato što nisam htio ići u iste opcije sa više ugovora, nego sam htio malo više dionica imat, kao u slučaju da ode krivo. Znači taj mjesec sam imao jako malu dobit, to je bilo možda do 1% na kraju. I sad sam uspio malo skalirati, sad sam opet nazad na nekih, znači prošli mjesec 7%, do sad sam 5% ovaj mjesec.
Čovječe, znači svaka čast. Stvarno. Prvih 5 mjeseci, znači, kaj? Nijedan mjesec bez gubitka.
Da, taj mjesec gdje je bilo tako oko 1%, to nisam baš bio sretan, ali znači sve skupa u tih 5 mjeseci, mislim oko 30% imam yield.
So if something is going into negative, I think Beyond Meat is one of them. Right now that's kind of -1. Those are like financial distress zones that you should probably be avoiding if you want to play safe. F-score, yeah, anything above 5 should be safe from with like financial background perspective. And then you can filter your options contracts as well. I can go through my filters in a bit, but let's go through like the columns that are available. First one, obviously expiration. I think it's self-explanatory. Strike price, it's also the amount of capital required for a single trade. Bid is what is the current highest value someone is willing to pay for the contract. So basically, if you're selling cash security puts, we can get $39 per contract for sure. It could be that we can get filled for 45, but yeah, the bid is kind of the lowest value that we use that we can get for sure. Current stock price is kind of the difference between stock price and strike price. So some people just like to, I don't know, click on diff and sort by the difference, and then basically they'll get the lowest possible strike price. Okay, right now it seems like we only have a few companies, but if you have a lot of companies, then this diff becomes very valuable. Risk is what is the chance of this option getting or ending in the money and you getting assigned. So basically risk of assignment and days to expiration is basically the difference between now and the expiration date. So then we come to actual yields. So yield is the complete ratio between the premium you'll collect, so $3 in this case, versus a capital required, so $100 per coin. This kind of comes up to 0.4 as the total yield. If you divide this by number of weeks in the contract, you'll get this percentage. Right now, this one is very low. And then if you prorate this, hey, if I sell this kind of option every single time, I'll get 2.7% yearly. Okay, data age, this is kind of useful. I mean, right now, obviously, everything's going to be orange because market is not live. We are in the weekend. And then, okay, rating. Right now, we have a formula where we compare weekly yield to the risk. So basically, we're trying to maximize yield per risk. This is not perfect. And yeah, I'm working to improve the rating score by including the kind of company financials. And there is one very, very, very useful trick with Greeks. So basically, Vega and Theta will tell us, hey, if the company becomes slightly volatile, how much value are we going to lose as option sellers? That's kind of what Theta is telling us. While Theta is telling us, hey, how much value are we going to get every day that we get closer to expiration? So basically, as option sellers, we want the ratio between Theta and Vega to be the biggest possible, or actually, if it's negative, the lowest possible. But in absolute values, we want as much Theta as possible and the least amount of Vega as possible. So we want to kind of minimize volatility, but maximize value per day. So yeah, we'll be modifying the rating score to include those parameters, and then there's some company metrics. So like, okay, right now, let's see if this matches my criteria. Like if I sell this option, okay, it's way below the stock price, so it's very, very, very safe option, and it's right about this kind of support level. But it's only yielding me 2.7% yearly, which is kind of out of my. It's not getting me to my goals, so I can just purely filter by setting my goals. Let's say 20% at least yearly, and risk. I like it to be below, let's say 20%. And okay, this will give me kind of the best possible deals. I usually sort by rating. And there is one thing that's popping out. It's this option that expires next week. It has a huge difference in rating, which meaning basically that the ratio of premium we'll collect for this particular option is a lot better than anything else currently available. Okay, sorry, this was a long rant, but David, any questions?
No, this was very useful. Like, I don't know, for others probably not so much, but I really liked your explanation. So basically, like, if I would consider a certain contract as safe, like from the side of like the broker, like I would simply request the buying of this particular contract, and that's it, right? Basically.
Yeah, we can go into the broker view. I just looked here. You mentioned safe. We kind of try to hint you with the coloring of okay, what's safe. I think from my experience, I figured out that 13% risk into the spot. If the stock really crashes to that point, it's gonna cause a slight panic in the market. So you can easily roll and avoid assignment. So maybe like I would actually consider this option as well because okay, still getting me to my yearly goal, but it has a lot less risk. So it's up to you to determine, hey, do I want to like maximize my profits? Do I like this company? Do I want to get assigned? Or do I just want to collect the premium and be safe? So like yeah, I mean this came up as two of the best options. They really are, I think, good. It just depends, hey, at this moment, what do you want? Do you want just to collect the premium, or do you want to get this company assigned and buy some shares? Yeah. Let me get into my broker. Okay, let's do the web trader. Okay, sharing again. All right. So we will do like HL, right? It was Hecla mining. I think this is one of the gold and silver miners. That's why it was booming. So I think the contract you pick is going to depend on yeah, how bullish are you on gold and silver at the moment. But yeah, okay, let's say I decided to go with the first option of like $12.5. I think gold is going to go up. I would like to get some skin in the game. And yeah, I'll just expand this view. And then, yeah, as you can see, there's just a lot of numbers in this screen. So this is the whole point of QuantWheel is like, okay, out of all these numbers, which one is actually suitable for me? Which one fits me the best? So yeah, we figured out the 12.5 strike price expiring this week is kind of a good deal for the premium. So yeah, as you can see, like 13 is the worst case scenario, but it's possible that we get filled somewhere in between bid and ask. So yeah, we can decide your limit price, let's say 0.15, and let's go with one contract. Fidelity automatically populates. Okay, it figured out because you clicked on the bid that you want to sell this contract, so Fidelity will freeze this max loss value for you. So basically, they'll freeze enough cash for you to purchase 100 shares of this stock, which is obviously strike price times 100. So your max loss is obviously, if the stock really goes to zero, you will lose 100 times 12.5. And yeah, you're collecting $15 for this in 1 week, which is very good. So this is like more than 1% in 1 week return. And the worst case scenario is you buy the stock that's currently trading around $14 for $12.5. So you're getting a nice discount in the worst case scenario. And yeah, that's it basically. I just go preview order, and I can do it even now. it will not go through because it's weekend, but
Hmm.
it might execute in the morning.
Yeah, if you don't want to do that, then cancel that. Don't forget.
It's okay. This is actually a good deal.
Awesome.
Yeah. So sorry, go ahead.
I just said awesome. Thank you. That was very useful for me personally.
Yeah. Okay. Trying to cancel. Cool. All right. I'm curious what Nikolai's thinking about all of this.
Well, to me, it still looks a bit surreal to just choose the stock, and trade it that way. But it's very interesting, and I would like to keep learning about potential strategies. And the last thing I saw that was very interesting for me was a split between hardware production stocks for AI and software production stocks for AI. So two indexes were mentioned in the video. I think you recorded it few weeks ago, and well, there since I've been working that industry for 4+ years, almost 5. Um, my question is, what dance to make this kind of prediction that this split will? Okay, it's never inevitable, but with high significance or with high certainty that this will be turned, because there might be whole universe of reasons why this inversion happens. So if you can share your thoughts, your insights, that would be helpful for me to understand thinking process and research process.
Yeah, good question. Yeah, so this is the chart I think you're referring to. So
Yeah.
basically, flows. This is not like a price action. This is how much cash is going in or out of some ETF.
Mhm.
Basically, semiconductors were seeing like outflows while stocks were getting inflows. So I'm not saying this is gonna flip anytime soon. What this is trying to hint towards is recently, like in the past year, they have kind of been reversed, or like they have been two sides of one coin. So like if there's an inflow in semiconductors, there's an outflow in software. So the whole idea was, if this continues, then yeah, it might be a good hedging opportunity. But yeah, I think you're right. Like they kind of started to consolidate and be basically both are now receiving some inflows. But yeah, if we do kind of monitor these charts and then see they're again diverging, then it's really easy to hedge your positions. Like you just, if you're bullish on semiconductors, you can buy puts on IGV and kind of hedge your position that way.
And how did you make this kind of graph? Where did you find the data?
Yeah, we have one team member that's constantly looking at the research and the data. This one came from Coifin. So sometimes we get this kind of signals and the data from others. In some cases, I do the research myself. So, for example, this gold research was me. I was feeling a huge FOMO, and I rarely feel FOMO. Like in the past 5 years, maybe I felt it twice or three times.
Mm-hmm.
And like, I really wanted to buy gold because, like, if the dollar collapses, if the US collapses under the pressure of debt and US debt goes into like debt spiral, gold is basically what's going to survive. And So I started to ask myself, hey, how do I know whether gold is overvalued or undervalued? And I realized, hey, I need to compare gold to the actual value of cash. So basically, this is inflation adjusted value of dollars, and you can, if you look at it that way, then the gold did have a great rally, but it kind of met the target, like exactly met the target last week. So this kind of signals, hey, it's still bullish, but people could start taking some profits. Also, another chart where like we compared gold to the total money supply, basically all the cash that is available uh, in the world. So it kind of allows you to standardize the gold value in proportion to the amount of cash that there is out there. So like if the government starts printing more and more money, this is very, very useful. So this also hit like some kind of a resistance level, which is also hinting, and it's a very nice number of around 2. So it was also hinting that there's some kind of profit taking happening right there. And similarly, also M1 money supply is basically liquid cash that people have, also hitting a resistance, which is from the 2000s. So this is hinting towards, hey, there might be a short period of actual profit taking, but on the other side, it's showing us that ratio of gold and cash still has a long way to go to like the 1980s levels. So it could literally, even if you don't print any more money, gold could go up times 10 based on this chart, right? To reach the same levels as 1980s. And some people are saying that yeah, this kind of stagflation could be even worse than 1980s. So this is very, very interesting. That's why I'm kind of wheeling the gold and silver stocks, because yeah, right now there could be some dips, so very good premiums on the put side. But if you get assigned, like long-term potential is definitely out there. Sorry, this was not a question,
Cool.
but I just wanted to share some insights. Go
It
ahead.
would be very cool to know what are like the actual gold mining companies looking at when they are deciding how much gold they will mine. I don't know what's the answer to that.
Yeah, I think people are looking at this kind of charts, basically adjusting it to the money supply and the inflation, and then kind of that's how you get the real value of gold. Also, the demand curve. So demand is driven by, like, gold is in literally like uh, computers and electronics. So yeah, gold has an actual application in real life. I do believe though that silver has a lot more potential upside. Like if you do the same charts as I did for gold, you will see that silver could go up 5 times more. And okay, just a fun fact: current ratio of silver and gold. Let me just quickly share the screen again. Okay, I'll try to do this live. So I use TradingView because it can allow me to like do formulas on stuff. So let's say gold versus silver. You can literally just write this into the prompt. It's going to show you the historical ratio of gold versus silver price, and right now it's like relatively high. Why am I showing this? Because there's an estimate that the ratio of physical availability of gold versus silver is 30-1, while the price is 81 to 1. So basically, an ounce of gold is 80 times more valuable than silver, but gold is only 30 times more rare than silver. And I would argue that silver has a lot more applications in the actual world. Like I think 70% of silver goes into in that industry, and only 30% goes to like investments, while gold is 80% investments, 20% industry. So like the demand for silver has both the investment and a lot more in the industrial applications. So yeah, silver could be a very, very interesting play. Even if you look at the like nominal chart, it could like literally double in the near term. So I'm quite aggressive with my puts on silver right now. Yeah, Anton, welcome.
Hello, guys. Sorry, I was late. I'm on the go, so I joined quite late.
The whole idea here is just people pop in, pop out.
Great then.
Yeah, we were going through some of the like strategies, some basics as well, and then gold and silver. I did want to talk about one interesting strategy that Luca is starting to do. I did not prepare any presentation for it, but I think it might make might make sense just by like talking about it. But I do want to keep it for the end, in case people want to talk about something else first. Anton, any topics, Borna?
I just want to say thank you for sharing the example on the quant wheel, because it's completely different from what I do, and I'm wondering if have I been using it wrong. So I ignore some of the filters and use the others, and I think yeah, maybe it's just the point of how you use it, and then
Interesting. Can you share like how do you use QuantWheel?
so I like to change the filter on the filter basically on the market cap, and I'm aiming for some range between maybe 500 millions and 4 billions, something like this. So very small market cap, and then I'm just checking the yield and checking the companies done. So with the manual research and with some ChatGPT and some how to say public view of the company, and maybe some other.
Cool. That's awesome. I'm actually I have a design in mind of right now. Like ChatGPT has an agent kit enabled, and I think Perplexity that also has very good research for this kind of stocks. So we are gonna provide QuantWheel modules that you can just plug in into those agent views. So we can use literally ChatGPT to find the stocks that match your criteria, do the AI analysis, and then also just let QuantWheel select the best options and actually execute the trades for you as an agent. So I would like to know what start with stocks first and then go into options, or do you start with options and then go into stocks?
Yeah, I mean, I just check the company and what are they doing, what are they selling, what does it make sense for me even to just to own the stock, and then I decide am I selling the options or not. Because if it's some company which is like selling something useless, I don't want to sell the options. If it's a perfect deal, I'm passing it because I don't want to stay stuck with this stock. So yeah, that's.
And how do you decide whether you want to buy the stock or like sell puts or like buy calls? Like,
Yeah, I mean, I first start with just selling the puts, and if I buy the stock, it's fine. If not, then I'm happy.
interesting. This is an interesting segue into like just the synthetic long I just wanted to share. It's gonna be 1 minute. Let me just quickly share the screen. Luca, co-founder of QuantWheel, he's been doing something similar recently where, okay, let's say you think gold is going to go up and up in next 6 months. So instead of just like selling puts and then missing, like let's say gold really does shoot up, just by selling puts, you're missing out on the upside. So what he's been doing is he's selling aggressive puts, so he's okay to like own the stock. Let's say he sells the put on 388, and he gets 13.25 premium for that. And that way, if the stock drops, he'll just buy the shares, which is great. Like he's convinced gold is going to go up. And then you use this premium to buy calls kind of for free. Maybe even like longer expiration calls. So let's say you could get 420 call that's expiring in February from the premium you got in November puts. So basically you're getting that the premium you collected and you're putting it towards buying a call in like $12 range for 20 strike price. So if the gold does shoot up, you also get even more cash from your kind of leap call. If the stock goes down, you buy it for cheaper price. So this is additional strategy where like, okay, yeah, you're using cash secure puts, you could be getting a better entry point, but if you're sure the stock is gonna go up and you don't want to miss on those profits, you can basically buy the call for free with the premium you collected from cash secure puts. I mean, we can probably plot the kind of the profit loss chart, but this is kind of the idea. I can go into more details maybe in a video. So I haven't done it yet, but I'm thinking to start doing something similar.
And you are doing this sequentially, or you're doing this at the same moment?
At the same moment, yeah.
At the same moment.
Yeah, one
Okay.
transaction, 2 legs. So you can kind of
Mhm.
decide the overall premium you collect.
Okay.
Yeah, I can show it in Fidelity as well if you want.
And how do you decide on the strike price? Do you go for the at the money or?
Great question. Yeah, I don't. I have to think how to make a formula for that. I think he does go at the money for the put, and then slightly out of money for a call, because that way he can get longer expiration on the call side. But he does like to own the stock because he thinks it's gonna go up, so he doesn't mind at the money put. So
Yeah,
let's
makes
say
sense.
just doing the same thing we did here. What was that? November 14, let's say. And I mean, this Fidelity gives me everything, but I just need them at the money. Put here. There's a drop. You can actually. Would you like some kind of a? Actually, would you like some kind of a diagonal spread? But I like to just do custom, and then I can sell on. So you can one contract November strike price. It's just, but just construct the discussed and for 12 the whole strike price. you can say, hey, I want a credit of, I don't know, 0.1